Hello, everyone. Welcome back to another Security Shorts with Scott. Thank you for joining as always. Today, we have a topic that actually comes up quite a bit, and that is the topic of cyber insurance. So I'm super happy to have with us today Tom Kang. He is the CEO of Converge Insurance Services. Tom, welcome to the podcast.
Hi, Scott. Thank you for having me. Great to be here.
Really happy you're here. This is a topic that comes up all the time, so look forward to getting some of your knowledge out to the folks. But before we do that, tell us the background. How'd you get into cyber insurance, and how'd you sort of evolve into cyber and insurance, or what's the history there?
Right. So long time ago, I was an attorney, and I was servicing, and some of my clients were in the insurance industry. And this is when a lot of the privacy regulations were just coming online. And so I was getting a lot of questions about this new area of exposure. What are these privacy regulations all about? And at the same time, there were a lot of data breaches, and there were regulatory requirements in responding to a lot of these data breaches related to these privacy regulations. So a lot of insurance carriers were just coming into the space. They had a lot of questions about what do these requirements entail? What are the new types of exposures that are being presented into the marketplace? And so during the course of representing a lot of my clients, I got recruited into the insurance space and started in the claims and legal space, then pivoted into services, product, underwriting, now and broker, and now InsurTech CEO. So I've seen cyber insurance from pretty much every angle that you can look at it from. Maybe save for reinsurance before get jumping into the cyber InsurTech space.
One of the questions that comes up around or with people with whom I speak is always like the core components of cyber insurance, and I always try to explain it to them like, regular insurance, you have underinsured, and you have collision and comprehensive and risk, and to try to make it a little bit more practical. But maybe you've got a way of explaining the core components of cyber insurance, what people need to think about.
Yeah, I think the easiest way to think about it is there are risks and exposures related to privacy issues and cybersecurity issues. And the cyber insurance policy is designed to cover the exposures related to those risks. So, for example, there's what we call first-party incident response coverage, and that can be a result of any cybersecurity attacks. That would include ransomware, that would include any sort of malware on your systems. And that provides coverage for costs to respond to that particular event. That would obviously include notification costs, credit monitoring costs, or any sort of forensic investigation and remediation costs. Now, if there's a lawsuit or a regulatory investigation that comes out of those events, there's also coverage for that. We call that third-party coverage, responding and defending against lawsuits and regulatory investigations that may arise out of those events. The last component broadly is what we call business interruption, especially with the rise of ransomware. Obviously, if your systems are locked down and you can no longer operate, that results in a significant business interruption, business impact. And there's coverage for that in terms of the lost revenues, lost profits, or extra expenses that you incur as a result of those events. So I'd really put it in three categories, but more broadly, it's designed to respond and help businesses get through some of these cybersecurity events.
Awesome. Yeah, super helpful. Now I've noticed in the past year, and this is a bit of a cynical, and there's two aspects to the cynicism. So the one aspect of cynicism is I've heard some people say, well, I don't know if I'm going to get cyber insurance because I'm not confident they'll pay out. I've heard that one. And the other one is, I don't know if I'm going to do security because I have cyber insurance, and if I get breached, why spend $1 million a year in security when I can just get my cyber insurance person to cover it? And I'm like, wow, that's like the barbell of cynicism on both sides. So I don't know which part you want to take, but those are two things I've heard in the past year.
Well, let me take the cyber insurance doesn't pay first, because I think that's the easiest one to address. I think that the response to that really is just in the data. And if you look at cyber insurance and its performance, which is all public data, by the way, in terms of its loss ratios and amounts generally being paid out by insurance carriers, cyber insurance, with the latest 2024 events, has what we call a loss ratio of 45%. In the hard market preceding that, about 2019 to 2022, many carriers they had loss ratios above 100%. Now, what's a loss ratio? It basically means the amount of premium you collect and the amount of claims that you're paying out. So in many years, over the past several, say since inception, generally on the low end, overall average was between 20 and 40. On the high end, sometimes it exceeded 100%, meaning insurance carriers are paying out more than they were taking in premium, which resulted in the hard market that many of your customers, I think, experienced. If they were purchasing cyber insurance, where their premiums were doubling, more than doubling over year over year.
We've definitely seen the just the general confidence. I love the point about the data being is just to say, it is a market that has transparency, so you can actually see that they are paying out, and it's a good way of addressing that.
Absolutely.
And then what about maybe we don't do security as well as we need to, so because we have cyber insurance, what's the point of having cyber insurance if we have to spend all this money on security too?
Well, it's not guaranteed that you will get cyber insurance year over year if you do not present a positive risk management program related to cyber to your insurance carrier. So you may get away with it for a year or 2 years, depending on sort of the claims activity. But the insurance market, as slow moving as it is relatively efficient, meaning we can identify risks that are good risks, poor risks, and the amount of premium that needs to be charged in order to make this a sustainable market. And so I would say that's point number one. It's not guaranteed that you're going to get cyber insurance. But moreover, some of these cyber attacks are devastating. And we just went through a ransomware event with a small business. They had cyber insurance, and I think because they had good coverage, they were able to continue to operate, and they're not going to fall into bankruptcy. But it does not cover all of their losses, right? It still has a meaningful impact on the business and their business plans and strategies going forward. And so good security, absolutely. Prevention is, what is the saying there? Prevention is worth a pound of cure. I would certainly subscribe to that in cyber insurance as well.
Yeah, the people that tend to say that, I don't think have gone through a proper incident, and anybody who has, they are so unpleasant. There's nothing about them that is fun and enjoyable. There's nothing. It's just a nightmare. So,
for small businesses, sometimes it's existential, right? It's an existential crisis.
Yep. All right. So let's pivot a little bit then to the current status of the market. So, if you're tuning in and you've been in the market for a while, there was a very difficult market, a couple, 2-3 years ago. I think it's a little bit easier market now. But what can people sort of expect in the market? If you're either coming up for renewal or you're just going out for your first cyber insurance quotes, what's sort of happening out there right now, Tom?
If you're a buyer, this is a fantastic market. If you're an underwriter on the insurance side, I would say it's a crazy market. I just had this conversation with a fellow underwriting leader in the market about the market and current market conditions, and the word crazy was thrown around quite a bit. Now, it's a great time to buy cyber insurance because 3 things are happening in the market right now. And I would call this a general soft market conditions. And in soft market conditions where there's more supply of insurance than demand, there are 3 things that occur. One, there is price compression. And so all of the increases that we've seen from 2019 to 2020, now there's about 5 to 10% decrease that you can expect in terms of pricing. The second thing that's happening is expansion of coverage. And so there were many exclusions and limitations on what the insurance policy could potentially cover. That's evolved over the last 10 years. Now there's more expansion of that. One example of that is coverages related to unauthorized collection of data, or what we call wrongful collection of data. So any lawsuits that arise out of wrongful collection or pixels, you can find some coverage currently in the marketplace that you may not have been able to find coverage for a couple of years ago. The third thing that generally happens is loosening the underwriting requirements. So there are markets out there that will now provide insurance for businesses that potentially don't even have MFA anymore, or have not implemented MFA. So from an underwriting perspective, from a insurance business leader perspective, we're back to the crazy, right? Before the hard market in 2018. But if you are a business looking for cyber insurance, this is a great time to enter the market.
Yeah, we see it on the security side. We can almost track, I think, some of the soft to hard markets relative to things like ransomware. Right now, most of the breaches we see are living off the land, identity based. Like you need to be pretty sophisticated in your monitoring and security to detect them. And they tend to do sort of nefarious things, but not necessarily ransom you. They can maybe they stay there for 3 months and gather a bunch of data, then do something nefarious. So we're seeing more sophisticated attacks out there right now for sure.
Absolutely. And, I think cyber insurance absolutely sort of operates in cycles. And so, there's what I would say is what's old is new again in many respects. And I think you can see the rhythm of the cyber insurance market by following ransomware attacks and some of the events in cybersecurity as well. The couple of things that have changed and evolved over the market, and certainly is true for us, is because there has been advancements in technology and how we consume submissions and actually work through the underwriting workflow and risk selection and pricing. We're able to get at much more volumes, many more submissions per underwriter in the workflow, meaning we can evaluate more companies. The second thing we can do is, because of our data and because of the analytics that we put in, we can identify what we believe is a good risk versus a poor risk, and therefore we can be much more aggressive in servicing what we believe to be good risk versus poor risk. So I think the advancements in technology and the data analytics in the cyber insurance space over the last 10 years does help us, to mitigate against some of the crazy or soft market conditions that we're seeing in the market currently.
Yeah, we see it. I mean, a lot of our customers are able to get really, really good, pricing out there because, we offer a broad service capability. So that does tend to help. And we have heard that prices are, people are starting to shop a little bit and seeing if they can get some prices down, which is always nice, obviously, in that case. Tom, real quick, sort of, I'm in the market, like I hear pricing a little softer market, thinking about Converge. What are some of the things that you guys do that you think are helpful and maybe reasons why customers should contact you?
There's been a lot of conversation in the marketplace regarding the tighter integration of services and insurance. So there are a lot of proactive services that you can take advantage of as part of the insurance program, and then certainly help around the incident response. When you do suffer an incident, there are service providers that can come in very quickly and help you remediate and help you get back to business. I think those are what we would call very much a table stakes in the cyber insurance market, and the way we implement many of those services is through our core partners, like Cyber. If a company or a customer needs some additional help on the proactive side, meaning mitigate and develop their risk management programs, we have great partners that can come in and help them move that forward. And then on the incident response side, I mean, we are a relatively young startup company, but we've already helped over 100 companies through some of these claims and incident responses. So I think we have a proven track record of getting better results than market and helping companies get back to business.
Yeah, it's one of those things out there where you talk to customers who are like, well, I sort of like a larger brand. Well, again, you all work with large brands on the back end, but sometimes being with a smaller startup-y company allows for a much better outcome in a lot of cases. So it's
absolutely much more nimble, right? Faster responses, and we are very much service-oriented, which might not always be the case for some of the larger brands.
That's right. Awesome, Tom. Well, listen, I appreciate the information. Anything else you would like to leave our listeners with?
This is the time to buy, right? Cyber insurance is a critical part of any business as they operate. Now, I think there are some requirements, whether that's regulatory or your contract, but I tell you that because of the increasing levels of threat that we've seen, this is absolutely critical that you get the right protection so that you can be prepared to respond and to continue to operate your business when the cyber attack happens. So.
It's just one of those things you have to have. Listen, I've been doing this 20 years, and an incident's going to happen. It's not a matter of if, it's a matter of when. And so you want that extra layer of protection. We have it. It's just something that's absolutely critical for organizations.
Yeah, I appreciate these type of conversations, Scott, and just being able to get the word out there, because to your point, we still hear sort of the same objections. Does it pay claims? And should I continue to invest in cybersecurity? Obviously, the answer is absolutely yes on both counts.
Absolutely. Awesome. All right, everyone. Thank you so much for joining another Security Shorts with Scott. Thank you, Tom, for enlightening us on what's happening in the market today versus a couple years ago. As always, if anybody wants to get a hold of us, Tom, give us your details. Where should they come find you?
Yeah, thank you, Scott. People that are folks that are interested in cyber insurance and Converge, they can find us at convergeins.com.
Perfect. And for everybody else, you guys know where to find me, SolCyber, SolCyber.com, Scott at SolCyber. Thanks, everybody, for joining, and tune in about 4 weeks for the next Security Shorts with Scott. Thanks, everyone.